Good morning. This is the video newsletter for Buy Sell Short for Sunday, July 10th. We're starting off with the Dow 15-minute chart. Friday's economic data, way worse than expected. Jobs report, only 18,000 jobs created. At least we created some jobs, and that trend has continued, but well below every estimate that was out there, and the market just got hammered after the open, down 100 plus. But like we were saying in the chat room, there wasn't a whole lot of dips. There weren't a whole lot of stocks down big. And the trend has been over the last several weeks, especially on these big gap down days, that usually when you don't see big dips in a lot of stocks, that there ends up being a rally. And we ended up rallying, and Friday could potentially have been another short trap in a market that doesn't have the QE2 excuse anymore for bears and shorts that, had a similar recovery that we saw, pretty regularly over the last several weeks. We had a nice bounce into the close on Friday. Granted, we really need a retrace in the market, but, there's a lot of strength out there, and earnings season is kicking off, and we are more than likely going to see a lot of companies beat their earnings numbers, quite simply because how many warnings have you seen over the last, month or so from companies? Very, very few. And with the economy starting to come around, we did have that rally on Thursday because retail sales were better than expected. Of course, we had a disappointing jobs report on Friday, and it didn't take the idiots on TV too long to start talking double dip crap again. Absolute nonsense. But, those idiots on TV are there for one reason: to create fear and to create hype and to sell ads, and that's pretty much their job. So you got to take everything they say with a grain of salt. If we look at the Dow daily chart, you can see, we've got a double top in place here. We also, if we flip over to all the other indices in a minute or so, see the exact same thing. So, all things point to a retrace. It's just this retrace, are we going to see it as a bullish retrace, meaning we see some air come out of the large caps and the small caps continue to outperform, and the laggard stocks continue to outperform, and that is what we're at least looking for right now. Downside support, if we do see an extended sell-off, would be that 50-day moving average down there at 12,381, 400. That's also a 38% fib retracement of this huge rally we've had over the last couple of weeks. Similar story on the SMH, back below the 50-day moving average. Don't really like that. On the Russell, you can see we also have a double top in place there. So, we also have, just to add a little wrinkle to this upcoming week, options expiration. We've had a huge rally over the last couple of weeks. Typically, you see the market reverse course on options expiration because the option writers want to make as much money as possible. Their perfect scenario is when puts and calls are both valued as close to zero as possible. The puts are pretty much wiped out right now. Calls are through the roof. So what could happen is we see them take some steam out of the market just so that they can screw the call holders. Sometimes, however, when we see these kind of large moves up and down into options expiration, that the trend continues. So Monday, Tuesday are going to be pretty interesting. If this market is able to hold up on Monday, the shorts should be very, very worried because we could see a very powerful move to new highs into August. I know that sounds crazy, but that's what we're looking at. This market, just like last year, and also just like the year before, earnings seasons, especially when we had sell-offs going into earnings seasons like we have had for the last several weeks, we've had powerful moves up as companies come out and, quotation marks, surprise. Anyway, let's jump into some stock charts. Actually, let's start off with mRNA. Like I said a couple of days ago, penny stocks have started to wake up in a big way. We jumped into this stock 16 cents or so on Wednesday. Our target was 27 cents, hit 28 cents on Friday. Looks great. Saw a little bit of weakness into the close. But, I would really love to see this stock go up 100%. And the reason I say that is you see this stock break through the 30-cent level, and all of a sudden we're going to start seeing these under $1 stocks start to attract some serious movement. Even the volume we've seen on mRNA over the last couple of days, very, very encouraging in my opinion. Target Breakout would be 50-day moving average at 32 cents. We actually picked some up in the chat room late in the day as a possible runner on Monday. On that same note, we've got KAD, Arcadia Resources. We played it a lot of times in the last couple of years. This is the cheapest listed stock right now at 7 cents. You know, everything is priced into this one. Bankruptcy, going out of business, going to the OTC, etc., etc. Bankrupt stocks trade higher than 7 cents usually. Once they go bankrupt, they end up trading at 10, 20 cents. So, you know, for a high risk, this offers some really high reward. 6 cents downside, 20 cents upside. I like the odds, especially if volume comes in here. So worth a little tiny gamble here, in my opinion. 7 cents and under, you know, you can place your stops at the recent low at 5 cents and, you know, see what happens on that. TRID, another under $1 stock, woke up nicely on Friday. Our target was 85 cents here. We jumped into it 72 to 75 cents. Hit 84 cents on Friday on very decent volume before retracing. Nice rounded bottom, a break through that 85 cents, and we could be looking at a move back up to $1. RSI up through 50. Stochastics look great. And again, the theme. Penny stocks under $1 are starting to perform like they should be. We haven't seen stocks actually do this in quite a while in this price range, so very, very encouraging. Quick mention on Sirius. It's been holding up very, very well over the last 4 or 5 days. Breakout is 225. News came out that they're going to be added to the NASDAQ 100, so that might be the catalyst for a push through that 225 level on Monday, and target would be a move back to those recent highs up there at 244. Got to mention NEI. This one is getting tight. Ascending or symmetrical triangle breakout here. 114, 115 sets it free. 128, the 50-day moving average is our first target. And, you know, this is the kind of stock in this kind of market where we're seeing small caps doing what they're doing that can easily challenge that 200-day moving average on the right news or hype or volume. There continues to be a lot of talk about cloud security and storage. These guys are mega cheap, and, you know, it's a matter of when, not if, the stock goes back up here. You know, really should not be down here. Got hammered in a bad market, you know, with a bad news, and, you know, that's what happens. But it gives us an opportunity to make all those profits back on a pretty beaten down stock here, with very few attractive stocks like this left in this price range. APP, a great winner for us on Thursday. We jumped into it 98 cents to $1, hit a 117 high. Continued to show very good strength on Friday, a close maker. Target 200-day moving averages breakout, and, you know, we're looking for similar action that we saw here back in April, where this stock just continued to run for days. If we get another green close on Monday, the race is on for this play, and that's all I'm going to say. ASTI, a lot of volume on this one over the last couple of days. Large bidders, large ask. They've got warrants that expire tomorrow, so we could see that manipulation abate. Why it would be there, I don't know. I haven't really thought that through. But, you know, this tight range here at the bottom, and, you know, quite a while since it bounced back to its 20-day exponential. There could be, you know, 10, 20% upside on this one near term, with stops, you know, right now, stops $1 on this one. And, you know, we could see a really nice run on a break of $1.10. CYCC, biotech stocks continue to find buyers over the last couple of days. This stock got hammered a week or so ago. They did financing at $1.36. Looks to have put in a bottom. We could see a very nice little move up on this one over the next few days. Picked some up, $1.23. Would be looking for 130, and, you know, a move back up to that 50-day moving average up there at the 140 plus area. So stops if you're playing this one, you know, $1.18, $1.16. If you wanted to place your stops at $1.16, you could possibly look at adding anything under $1.20. But I think we should see a very nice week on this one coming up. Last but not least, we've got IKAN. Like the bottoming action we're seeing on this one, it continues to try to get a positive MACD cross. looked really good on the Thursday session, and then a little bit of weakness on Friday, and a bogus print at the close on a couple of hundred shares. 125 is the breakout. 130, 140 remains targets on this one if you're placing stops. $1.15. But if this stock did see lower prices, I'd probably consider adding to my position. Of course, it would all depend on what the market is doing on that day. But another cheap tech play that could see a nice little rebound if we start to see that money really flow into these cheapy stocks again. So that's it for the video. We're probably looking at some possible weakness this week because of options expiration, but we'll get a better idea on Monday and Tuesday if that is going to be the case. If we do get a green move on Monday, we could be in store for a very nice up week into options expiration. And a lot of shorts got stuck in this market over the last couple of days. And, any sort of greenage, we're going to have that rocket fuel to power this market higher. So that's it for the video. See you guys in the chat room on Monday. Goodbye.